Good afternoon, everyone. My name is Heather Doucette, and I am the Marketing and Event Coordinator here at NetElixir. As always, I'm super excited to be here today as we discuss the fundamentals of modern search. The fundamentals for today's presentation are creative excellence, automation, measurement, and targeting your audience. As we discussed in yesterday's presentation, AI is revolutionizing paid search. These dynamic changes are impacting the entire industry, and leading marketers and retailers are adapting to these changes in order to stay competitive. NetElixir is offering throughout the month a series of webinars and special offers that will help you stay current with the development in AI. These webinars are all centered around modern search. Yesterday, we introduced AI and audience. The recording will be sent out to all registrants this afternoon. Today, we're going to be covering the fundamentals of smart bidding, measurement, and creative excellence. Next week, NetElixir is going to attend the Google Marketing Live event in San Francisco on May 14th. There, we will capture new consumer insights and the latest digital marketing products Google is offering. On May 17th, we'll be hosting a webinar to share the key points presented at the Google event. To end the month of modern search, we will be joined by our premier partners at Bing to share with you more insights. Next, we will introduce to you our keynote speaker for today's presentation, who is Manish Mohan. Manish is NetElixir's paid media director, and he is responsible for driving retail-focused paid media strategies spanning search, social, and marketplaces. He has worked with businesses across verticals like apparel, beauty, home decor, automobile, consumer electronics, and gifting, just to name a few. With the retail landscape undergoing massive changes across the globe, Manish focuses on creating a profitability-based omni-channel solution that analyzes customer journeys across various buying stages and helps businesses acquire the right customers. He also works on generating a real value proposition from various machine learning and AI-based solutions in paid media space by leveraging retail insights, which we'll be covering today. So for those of you not familiar with NetElixir, our goal as a company has always been to help retail brands find and acquire new customers. We go beyond the data and we see the value of every click and the customer behind that click. The idea of humanizing every click is what we believe really separates us from the crowd, and it allows our clients to position and target more strategically. Here at NetElixir, we are comprised of 130 fanatically analytical global search marketers dedicated to helping retailers find and acquire new customers online. Since 2004, our data-intensive approach and deep retail expertise have delivered success for hundreds of brands in a highly competitive marketplace. We have built powerful relationships with partners like UPS, Google, Bing, and BrightEdge, and we have connected with over 400 retail clients to help their customers all around the world. It is our job to make sure that your brand owns a search bar, and we do this through our services such as paid search, organic search, paid social, web analytics consulting, CRO, Amazon ads, and e-commerce tech development services. As a reminder, if you have any questions throughout the webinar, please do not hesitate to drop your questions in the chat box. We will answer your questions at the end of our presentation. So without further ado, please welcome Manish Mohan.
Thanks, Heather. Right. Excited to be here. In yesterday's webinar, Udayan Bose, our founder and CEO, shared the whole concept of modern search and how exactly is it sweeping massive changes in the paid search world. We have identified 4 key components, like Heather mentioned, which are automation, measurement, creative excellence, and targeting. In yesterday's webinar, we focused a lot on targeting and some elements within that. We'll start by discussing about automation today. And I'm sure anyone who's in the room today and attending this webinar would have come across these words, right? Smart bidding, smart campaigns over the last few months. These have been the focus area for Google, Bing, Facebook, and almost every advertising platform out there over the last 1 to 2 years. As we get into some more specifics within smart campaigns and smart bidding, we'll try to understand what these concepts mean, but more importantly, the focus in today's webinar will be to understand how exactly do you execute these, how do you adopt these in your respective ad accounts. The first question that comes to mind is how much is enough, right? If you're planning to make a switch from manual bidding to smart bidding, how do you do that transition? Do you just flip the switch and go from 100% manual bidding to 100% smart bidding? Or do you adopt a phased approach by moving certain campaigns out? That is what we will try to understand today. And we will share with you a 6-step plan to make this transition. And that plan has been developed based on our experience as we tested this out with some of our existing clients. Before we get into the specifics of the plan, we wanted to spend a few moments on understanding why smart bidding has become so important. Its AI and machine learning have evolved over the last many years and will continue to do so, which is probably the biggest difference between an AI-based solution and a manual approach. For an AI-based solution, the whole concept of perfection is a moving target. Every time AI comes close to being perfect, it raises its own bar as there is deep learning involved. What you're seeing on the screen right now are some of the signals that Google uses to inform its smart bidding algorithms. The device that the user is using, the physical location, the user intent, ad characteristics, what browser they are on, where in the online customer journey are they right now, extending all the way to some upcoming features like price competitiveness, which will be launched for Google Shopping, wherein if your price for a particular product is lower than or is competitive enough compared to other players in the market, Google will start prioritizing your products on Google Shopping. There are some seasonality based metrics coming in, wherein while we do know that Google, Bing, or Facebook understand the usual seasonality in the business, if you want to let the system know that you are expecting a surge in traffic for whatever reason, you can now include an additional variable to inform the system and help it react better. With all these signals, I think it's safe to assume that there is no way that a manual approach can ever track so many different signals at the same time. With that, let's look at the 6-step process that I spoke about. And again, I want to reemphasize the fact that this is not based on any assumptions. It's a process that we have tested out with our clients, and we'll also share some success metrics that we were able to drive using this process. First and foremost, be selective. We completely understand that there is a mindset change involved here. While a lot of brands have been used to manual bidding for so many years now, it's a big mindset shift to now trust an algorithm to make all those changes for you. So you have all the right to be very selective here. And quite frankly, we don't believe and we don't promote the fact that all campaigns need smart bidding. There are certain assets, there are certain terms where you've been owning the space for a while now, and you might be able to get away with a manual bidding, at least for now. What that also means is there are multiple smart bidding goals or multiple smart bidding techniques that at least Google is supporting at this point. You have enhanced CPC, you have target ROAS, target CPA, and some other upcoming smart bidding options. When I say that we can be selective in what campaigns go under smart bidding, you should also be selective in terms of what smart bidding techniques do you use in the account. And this becomes a pretty big challenge. And the reason for that is every business has a certain way of measuring success. All the paid search advertisers in the room today will know that you might have used ROAS as a target metric or a success metric. Some clients use a cost per acquisition as the goal for the whole account. While that is great to have as a blended goal for the whole account, you may be having 100 campaigns, 200 campaigns. The benefit of using smart bidding is that you can get a lot more specific now. And I'll give you one quick example. Let's say you have certain products which are at the higher price point and they typically drive fewer orders, but when they drive an order, the average order value is high and the margins are higher. You might also have a lot of products which are accessories or your clearance items, which obviously drive a lower average order value and in some cases a lower margin. What that essentially means from a bidding perspective is that you can use target ROAS for that first category for the higher priced products, where you tell the system that let's drive more orders, but let's go after customers who are willing to spend that much and still convert. Whereas for the second category, where the number of orders is more important, you use a target CPA based smart bidding, when the revenue is not that important, but whatever amount you are spending to acquire these customers, you want to make sure that the conversion rates are strong enough. Enhanced CPC, as it stands today, has become the norm. Almost every single campaign that you have is recommended to have at least enhanced CPC as you start off. And once the campaign gathers some data and some history on conversions, you can then start moving to other forms of smart bidding. The moment you make the switch, even if it's a phased approach, you have to be cognizant of the fact that the campaigns will start behaving differently. Traditionally, you would have seen that your brand campaigns were driving a lot of revenue and orders, and you had a higher ROAS there. But with the switch to smart bidding, you'll start seeing a shift towards other upper funnel queries. And what that means is that you will probably also have to relook at the media plan and the budgets. Once the data starts flowing in, depending on what the goals are, be prepared to map the budgets for every campaign that is using smart bidding. One very important thing that we should remember is while AI is great, machine learning is great, it still feeds on all the data that is going into it. So if the quality of the data is not good, if the signals are corrupted, it could mislead the smart bidding algorithm. I'll give you again one quick example. You set up a broad campaign with some upper funnel queries. Let's say in this case, from a paid search perspective, let's assume that you had a lot of broad keywords in there. And you expect the campaign to convert at a 500% target ROAS. The problem with this is, being a broad-based campaign, it will essentially go after every single customer who's online. And the signals that it's getting is pretty broad. With that, it will probably struggle to drive a very high ROAS. In this case, what you would ideally want to do is, if you still want to go after those upper funnel queries, maybe try running it as a target and bid campaign, so that the campaign only serves ads to a subsegment of the online users out there. What that means is you are lowering the possibility that it's getting corrupted data, and it's getting data only from a limited set of qualified users. In which case, even if these are new users, the system might still be able to hit whatever ROAS you asked the system to do for you. Moving on, one of the big challenges with smart bidding adoption, again, this is based on what we have heard as feedback from our clients, is seasonality and conversion delay. While we see that smart bidding algorithms have improved over the last few months, few years, if you think about the surge in traffic that happens from Q3 to Q4, or for some other clients from, let's say, the last week of April going into Mother's Day, last week of January going into Valentine's Day, that surge is insane, right? You're looking at probably 400, 500% increase in traffic patterns. It's quite possible that the smart bidding algorithm might not be able to react accordingly. And this calls for an important manual override. That is, when you enter such peak seasons, you may want to go in and tweak the goals that you had set beforehand. be it a target ROAS or a target CPA, you might want to make it more realistic, knowing the fact that CPCs will go up. While you may have been able to drive a 5x ROI throughout the year, you probably might at best get to 3.5 or 4 during those peak weeks. So it's important to factor those external influences in and make tweaks to the campaign. Finally, once you start running these smart bidding algorithms, you'll start getting a lot of inputs on the creative side as well. And creative excellence is one of the topics that we will cover today, and I'll go into some more details when we get there. But it's important to note that while focusing on smart bidding is great, we should not ignore the impact of creators in this whole process. Moving on, an extension of the smart bidding concept was when Google launched smart campaigns. They wanted to take the whole impact of AI and machine learning to the next level by automating everything around a campaign setup. And they started testing out smart shopping campaigns, and they're also testing out smart search campaigns in certain markets. One common feedback that we have got from clients is, are these smart campaigns probably a black box? Because you set it and you forget it, right? That seems to be the approach. Do you really have as much control as you want to compared to when you were running a manual campaign? And we understand that concern. It's a valid concern, and it has to be addressed. So we again tested it out. On the shopping front, what we recommend here is definitely set up multiple smart shopping campaigns. Do not go for just one big smart shopping campaign, which essentially will lead to the fact that you push all your product feeds into that one campaign. That essentially leaves you with minimal control on what products are serving to what customer segments and may not be ideal for all brands. With multiple smart shopping campaigns, you still have a lot more control, and you can prioritize these campaigns based on the kind of product categories you have. Identify different target ROAS thresholds that are realistic. While smart shoppings have performed really well in the tests that we have done, it's extremely important that the goals that you set are realistic. Go by the past data. It's okay to challenge the system to probably drive a 10 or a 20% increase in the ROAS, but do not go beyond that. Because by doing that, on one end, you are hurting the impact of target ROAS methods, but you're also kind of impacting the traffic pattern, and the overall new customer acquisition might take a hit. While you focus on your key categories, also make sure that your low priority products are all grouped together in a catch-all campaign. And one very important prerequisite is that if you have been testing regular shopping campaigns in your account, make sure that you pause them if you are setting up campaigns for under smart bidding. Because typically the way Google works is to make sure that if you have any pre-existing regular shopping campaigns, they should be paused, because Google by default will start prioritizing the smart campaigns, and your existing shopping campaigns will see a drop in performance. And finally, as I said in the previous slide, make sure that you move the goals based on seasonality so that the algorithm can continue driving the right customers to your campaigns. These are some quick results. Again, like I said, we tested this out and the results were great. Smart shopping typically drives around 20% higher revenue or conversion value. And smart display, which is again an extension of the smart campaigns, have typically driven 20% higher conversions at the same cost per order, which is great because display campaigns, for anyone who's been in this space for a while, would agree that display campaigns are difficult from a conversion perspective. And smart display is adding a whole new dimension to the performance side of display campaigns. Moving on, the next topic we wanted to touch upon today was creative excellence, which has two subsegments: responsive search ads and responsive display ads. Creative excellence has also become a very important factor in this whole drive towards AI. And the reason for that is, while it's great to look at data and automate probably every part of paid search, it's important to take a step back and understand the fact that at the end of the day, we are talking about real customers, real human beings. It's easy to ignore all of that and look at all your customers as just mere data points, which will lead to sort of a trap where you tend to ignore the human element. And that leads us to believe that creative excellence will ultimately become one of the biggest differentiators in your paid search strategy. The reason Google came up with the whole concept of responsive search ads was because of this slide that you see here. Expanded text ads have been around for a while now, and all the platforms made a big push moving from the legacy ads to expanded text ads. It worked out really well in the beginning. The best practice was to have at least 3 expanded text ads in every ad group. It gave you a lot more space on the search engine's results page, and we could communicate a lot more about the brand. Interestingly, when an analysis was done on the impact of ETAs, what we happened to see was after 3 ETAs in every ad group, if you continue adding more, the incremental impact in click-through rate sort of plateaus out. And that led to this whole concept of responsive search ads. At a very high level, responsive search ads essentially let you add up to 15 headlines and 4 description lines into every campaign. At the surface, it looks as if you're just adding more characters to the existing ad copy, right? You have more headlines now, you have more description now. But what it's really doing is it's bridging the gap between creative and context. What we mean by that is, while we were doing great with having 3 expanded text ads in every ad group, the assumption there was with 3 ETAs, you were able to talk to every customer who was out there. If someone is searching for the word flower delivery, and if you have 3 ads in your campaign, you're assuming that anyone searching for flower delivery anywhere in the world, you're able to talk to them with those 3 ads. But the reality is that though they are searching for the same word, which is flower delivery, all of them could be in different contexts. Someone may have searched for sympathy flowers before that. Someone may have searched for birthday flowers before that, or birthday gifts as a search term. This is where the context becomes important. And with responsive search ads, by having up to 15 headlines and 4 description lines, Google will be able to understand what this user has been doing online before they did the last search and personalize the ad copy accordingly. If there are customers who respond better to free shipping ads, that particular text will be pushed into headline 1 versus someone else who responds better to a promo ad, wherein headline 1 might be replaced by the specific promo and free shipping could be pushed down the priority line. We are somehow obsessed with this number 6 today, and we will be sticking to a 6-step plan even for responsive ads. The first step here is to do more like a brand study and almost segment your brand story into 15 headlines and 4 descriptions. Assume that you have no promos, no promotions running on your website. And if you were to talk about your brand through 15 lines as the headline and 4 description lines, what would those be? This will be step 1. Once you do that, you have the assets ready for launching responsive search ads, but make sure that you test RSAs for your top traffic generating campaigns. And there's a reason why we say this. With responsive search ads, the reporting will become very complex. You may have been used to looking at 3 ads and all the different data points for 3 ads in every ad group. You're now talking about hundreds of variations. And with that, it's important that whatever campaign you tested in has enough traffic to support these variations. If you happen to push this into a low traffic campaign, you will still have hundreds of variations, but every ad variation may have 2 or 3 clicks. And it's quite obvious that you will not be able to make any conclusive judgment based on that. Once you run this, use that conclusive data to expand into other campaigns. One of the big challenges, or I think an opportunity that came up with responsive search ads, was a lot of brands want to make sure that they include one particular thing in the ad copy for every customer who searches for them. It may be a key brand attribute. It may be a key offer that you have. Some sites have free shipping all throughout the year. So you want to make sure that every ad talks about it. Google thankfully has an option where you can pin a certain part of that copy so that every variation will definitely have that one line and everything else in that copy will be constantly tested. And as I said, you are now testing hundreds of ad variants. It's no longer 3 ads per ad group. So before you analyze and take any conclusive next steps, make sure that you give it enough time. With expanded text ads, data from probably a week or two of testing was good enough, assuming that you were spending a significant amount on search. But with responsive search ads, you may have to wait a little longer so that you get conclusive data on at least the top 20 or 25 ad variations, and then understand what are those winning phrases and replicate it into other campaigns. One of the biggest questions that was asked after we launched RSAs with some of our clients was, how do you measure success, right? It's obviously a different ad format. It gives you a lot more creative freedom. But how do you determine if it was a success or not? We initially went by the traditional method where we compared responsive search ads and ETAs. And it was almost like a mixed results where certain clients saw better performance from RSAs, whereas interestingly, some clients continued seeing better click-through rates on the expanded text ads. And that is when we understood that there is probably a lot more value beyond that. So rather than just comparing RSAs to ETAs, you should ideally measure the overall incrementality by adding RSAs into your account. We did that for one of our leading clients from the computer manufacturer vertical, wherein we identified all the ad groups that drove more than 80% of the total traffic and added responsive search ads. After a few months of testing, the overall incremental impact was significant. The ad groups that had RSAs in them had 42% lower CPCs and a 50% higher return on ad spend. It's usual to measure ad copies by using click-through rates as a benchmark. Interestingly, in this case, responsive search ads also had an impact on the return on ad spend. And that can be correlated back to the click-through rate, leading to more qualified customers, thereby leading to better sales. And the biggest takeaway from this whole experiment was that the creative excellence score for this account crossed 91%, which is way above the industry standard. And we are talking about a brand that spends in millions of dollars every month. So every single percentage point movement in click-through rate or CPC is pretty significant here. With that, we'll get into the third bucket, which is measurement. I know we have a lot of marketing folks who are attending the webinar today. When was the last time you walked into a room with a bunch of finance people and you discussed a lot of creative ideas and you walked out winning that argument? I'm pretty sure that would have never happened, and rightfully so. For any business to survive, especially in the cutthroat competition that we see today, it has to, at the end of it, it has to make commercial sense. The numbers have to add up. So while creative excellence is great to pursue from a creative perspective, automation itself is a great creative strategy to drive more orders coming in. At the end of it, attribution has to make sense. And there has been a lot of hype around non-last click attribution over the last so many years. It's almost like that Bermuda Triangle where you get lost every time you try learning about it. The second element that has come out within measurement is something that we call the prominence metric. Some of you might already be aware of this, that the metric called average position will soon be sunset, probably around Q3 of 2019. And that changes a lot of things in terms of how we have managed paid search. Every bidding strategy was usually mapped back to the average position that it drove. That whole metric is going away, and Google is replacing it with certain prominence metrics, which are impression share, top impression share, and absolute top impression share. So you will still be able to see where your ads are showing up. It's just that you cannot get very specific in the position. The biggest impact that we see here is for brands that have other resellers in the market. And as a manufacturer, you may have had these legal contracts with your partners that you have to stay away from the first position for my branded terms or certain other keywords. This whole shift to prominence metrics will make that pretty complex. So it's time that you may have to go through those contracts again and figure out a way in which, not knowing the average position as a metric, how do you still ensure that your partners continue showing ads on search but do not kick you out of that first spot. Having said that, we'll come back to non-last click attribution because that is the focus for today's discussion. The evolution to the data-driven model, which is probably the most popular one in the market today, has been a time-consuming process, right? We have had last click model, which has probably survived a couple of decades now. We have brands that are used to looking at first click numbers, and then we have certain other non-last click models like time decay, a linear model, or a position-based model. While time decay, linear, and position-based, all these three models had their advantages over first click and last click, they were still not perfect. Perfect in the sense of giving due credit to every touch point based on every customer's context. A position-based model assumes that the first and the last click are most important and everything else gets an equal credit. But what if that first click that came in was from a brand new customer, new to file customer, who was not even considering your brand before this? Does it make sense to give equal credit to that click and the last click? And let's assume that the last click was a cart abandonment email. That is where DDA, or data-driven attribution, comes in. We have again started testing this with a lot of our clients. Initially, back in 2017, we did end up seeing mixed results, and we were ourselves very skeptical in recommending this to our clients. But as I said in the beginning, you have to keep testing to learn more about these new features, and we did that. And as it stands today, we are a lot more confident and comfortable pitching data-driven models to our clients and are actively talking to all our existing clients to make that switch so that we can see some better data points coming in. And the reason we are focusing so much on data-driven attribution, it's twofold. I spoke a lot about smart bidding, how it's revolutionizing the paid search world, and why you should be doing it. But one of the prerequisites that I did not mention in the beginning is that the success of smart bidding is heavily dependent on non-last click attribution. The reason for that is, as I said in the beginning, the AI engines can only do as much as the data feeds them. So if you have a last click attribution model in place and then you adopt smart bidding, it might still end up chasing the higher ROI terms. For most of the brands, these are branded terms. And hence, though smart bidding will seem to be working, it may not help you from a new customer acquisition perspective. That is where step one has to be to switch to non-last click attribution, preferably data-driven models, and then activate smart bidding in Google Ads. This will essentially help you have better decisions being driven by the smart bidding algorithms. Again, based on the feedback that we have got from our clients, one of the reasons why clients do not make this switch is that they've been used to looking at last click numbers for probably 5, 10, or even more than that. The reason it is still important, as I said, is to make sure that smart bidding works, while we completely understand that you have a certain reporting model in place. So there is a mindset issue here. So what we are now proposing is continue using your primary analytics platform from a last click model. It may be Google Analytics, it may be Omniture or Core Metrics. Let that be last click for the time being so that your internal reportings does not get messed up. But at the same time, let's make sure that your Google Ads platform or any advertising platform that you use switches to smart bidding. This is almost like a best of both worlds, wherein all the AI and the machine learning that you're using continues getting better data, whereas your internal reporting still uses the last click attribution. Coming back to the plan, 6 steps. Start by comparing last click versus DDA data for every campaign. Do not stop at the account level because that could be misleading. Go all the way down to each campaign, and depending on the kind of spend and the traffic patterns, you may have to look at anywhere from 4 to 12 weeks to make a conclusive judgment here. Once you do this, based on our experience, 9 out of 10 times you will end up realizing that data-driven attribution is actually driving better value for all the paid search campaigns. Once you determine that, go back to the drawing board and reassess what your media plan would have looked like if you did not even have last click in place, which essentially means your campaign level budgets will look way different now. Once you do this, switch to DDA within Google Ads. Retain your current budgets and bids. Do not make any changes there, at least for your top performing assets, and let the data flow in. And a quick note of caution, the moment you make the switch to DDA, there will be certain delay in the data coming in. So be prepared for that. And that is the reason we recommend not making any changes on your core analytics platform, because that will still continue tracking everything as is. Whereas Google Ads will undergo this learning phase where it understands what the DDA attribution model looks like. Once you have the data coming in, adjust the budgets going back to step 2. So you're almost going back to what the media plan would have looked like, and you are almost reassessing what some of those upper funnel terms look like. Adjust the budgets and also be prepared to see a drop in ROAS for some of your previously high performing campaigns. It's essentially what is happening here is it's a redistribution of spend, it's a redistribution of conversion and success. So overall, the paid search program should definitely continue driving similar returns, but from a campaign level perspective, you might see things moving around. Once you do this, continue monitoring the variance between the data that you see in Google Ads and compare it to your primary analytics platform. Interestingly, you might see data changing even in your core analytics platforms. And that is where we did a very similar approach for a leading kitchenware brand, wherein the client was using last click model for more than 10 years. And we recommended them to move to the DDA model. As I said, we did this only in Google Ads. So their core analytics platform, which was Google Analytics, continued to be a last click model. Understandably, the upper funnel campaigns started getting better traction and better credit for driving conversions across the board. The biggest success that we saw from this whole experiment was that while Google Ads definitely started showing better numbers, the last click ROAS, as reported through Google Analytics, went up by 33%, which is frankly something that even we did not expect when we went out doing this test. Because once Google started reallocating the spend across different campaigns, the incremental impact was so strong that the overall revenue from the paid search program also went up without a big jump in the overall spend. And hence the ROAS went up by 33% in analytics, while it went up by more than 60% in Google Ads. And this again is a client who was spending in 6 digits every single month. So you're looking at a sizable amount of data point coming in here. So that's what I had to share today about modern search, the key elements, and what is the recommended approach to go about these 3 different automation elements. A quick recap: creative excellence, targeting, measurement, and automation are 4 buckets that we feel are going to be extremely important in 2019 and beyond. When it comes to automation, select the right smart bidding technique based on your business goals and specific nuances within each product category. On the creative excellence part, definitely test out responsive search ads in the top traffic generating campaigns, generate qualified data, and then understand what the winning phrases were before you move on to other campaigns. And the success of smart bidding depends on non-last click attribution. So if you have not made the switch as of today, first make the switch to DDA and then adopt smart bidding to ensure success.
All right, great job, Manish. Due to time, we're only going to take one question. So our first question comes from Peter. Peter would like to know, are there any drawbacks to smart bidding besides waiting for data to come in?
Great question. So the data coming in being delayed is definitely one of the drawbacks. But apart from that, the biggest, I wouldn't say it's a drawback, but I would definitely say it's a challenge and there's a learning involved, is that seasonality seems to be a big challenge with smart bidding. So as I said, when you enter those peak periods, be it around holidays, Valentine's or Mother's Day, make sure that you tweak the goals within your existing smart bidding algorithms. If you historically had a 5-row OS, look back at last year's data, understand what the variance has been, and make sure that you adjust the campaigns a few days in advance so that the system knows that you are now opening up the campaign and you are willing to get those orders in at a lower OS so that the traffic during your holiday season will not be impacted.
Okay, perfect. As you have learned, AI is disrupting paid search advertising, and you must be prepared. To help you prepare, NetElixir has created a modern search best practices checklist, which you can easily download at netelixir.com/modern search. For today's webinar, we would like to offer our listeners a modern search adoption audit. Since paid search is transforming at an alarming pace, and the renewed focus on automation, creative excellence, measurement, and targeting is challenging the way search is managed, we can help you navigate this change by analyzing your current adoption rates for these features and recommendations, a phased approach to get started. For those of you interested, please send us an email at insights@netelixir.com to request your modern search adoption audit today. And this concludes day 2 of Modern Search Month. We hope you enjoyed it and we found it useful for resolving your real-world solutions. Have a great day, and we'll see you back on May 17th to discuss and share as we share the key points presented at the Google Live event. Thank you and have a great day.